everyone, my name is Chen Yujia. My matching number is 259699. And the profit are growth of investment instrument or financial asset that are held by an individual, a financial institution, or an investment field. For analysis of the investment profit, we have chosen 7 equity stocks from the main market of the Bursa Malaysia Unit Trust and U.S. market in our profit. There are 5 stocks include Maxis Berhad, Astro Malaysia, GDEX Berhad, Malaysia Resource Corporation Berhad, and RHB Bank Berhad are chose from main market of the Bursa Malaysia. The store then we chose are from the different sectors which are correctly service, construction, banking, telecommunication, and multimedia to diversify the profit. Besides, we also set a Kanaga Growth Opportunities Fund and one international stock from U.S. market, which is ASML Holding, whereas it was a semiconductor sectors.
Assalamualaikum and good day. My name is Suzanawati binti Makzai and my metric number is 270279. Today I will explain about the correlation of equities in initial outlay of 5 equities. From the table we can see that all the equities are less correlated. The correlation between equities of RHB and MRCB was the highest positive correlation with 0.2675. While Maxis has the lowest positive correlation with MRCB, which is 0.0087. Next is KUMP analysis in initial outlay of 5 equities. Based on the table, it shows that the market return of the initial portfolio is negative 0.01%. That we can get from the performance of KLSE index from 4 January until 28 October 2021. Besides that, we can see that the risk-free rate of the initial portfolio is 1.86%. That are based on the short-term bills. However, we also can see that the highest beta is Maxis, with the amount 1.0896 that are the most sensitive to respond to the market volatility, while the lowest beta is a GDEX with the amount of 0.6732. However, we can see that the overall of the initial investment was performed moderately. Next is the table shows the allocation and results of expected return in initial outlay. Okay, based on the table, we can see that Maxis, GDEX, and MRCB have the negative average return. Does it also lead to the negative expected return? However, Astro and RHB have the positive average return and also the positive expected return. From the table as well, we can see that the standard deviation for the initial portfolio is 0.0105, whereas it indicates to the low risk for the initial portfolio. Meanwhile, the Sharpe ratio for the initial portfolio is negative 1.7921, which is below 1, and it was considered as inadequate.
My name is Guan Jia, matrix number 261707. I will continue to discuss about the first rebalancing. In this first rebalancing, we are adding a new asset which is Kanaga Growth Opportunity Fund. The table below shows that the correlation on first rebalancing, all equity are shown a lower correlator between each other. There is a lowest correlation between the Maxis and RCB, which is 0.0144, where the higher correlation is between MRCB and RHB Bank, which is 0.3038. In overall, This portfolio are not highly diversified, but by adding a new asset, it has increased the diversified and rebalanced the portfolio. Second, this table shows that the CAPM analysis on first rebalancing. The market return for the initial is negative 0.01% and has reduced to negative 0.03% in the first rebalancing. The risk-free rate is 1.86%. For beta, Macy's, MRCB, and RHB Bank have shown an increasing, while Astro and GDS have shown a lower beta in the first rebalancing compared with the initial. Besides, for the expected return, Astro and GDES have shown a better performance in the first rebalancing compared with the initial, and the expected return of Kanaka Gold Opportunity Fund is 0.0067 in the first rebalancing. This table shows the allocation and result of expected return on first rebalancing. There are three stocks that we are not encouraged to invest with: Macy's, GDS, and MRCB, as their average return is negative and expected to be lost. Thus, the weightages is 0 in this rebalancing. Since only Astra and Kanaka Gold Opportunity Fund have shown a positive performance, thus the percentage of the weightages is higher. We invest 60% of the weightages in Astra as it had the highest average return, which is 0.031%. The total expected return is 0.0179%. The standard deviation is 0.01321, has shown that it is a lower risk portfolio. The Sharpe ratio is negative 0.3973. It is lower compared with the initial. Since the Sharpe ratio is below than 1, hence is considered as inadequate. This is all from me. Thank you.
Good day, everyone. My name is Yvonne Python, metric number 263244. I will next present about second rebalancing. On 9 December 2021, we had invested in a new international stock, which is ASML Holdings, in our portfolio. Correlations of second rebalancing. The correlations are mostly positive except for ASML. The rose candle shown correlations increase, whereas the blue color indicates correlation decreases. The blue color ones, the low correlations is more preferable, thus the overall portfolio risk is diversified. ASML and Astro, they have a strong negative relationships, so these two stocks is a good combination. For MRCB and RHB, they have the strongest positive correlations. It may cause a win-win or lose-lose situations later. Kappa analysis. The less performing stock is still Macy's, as it had a higher beta, higher market risk, and lower expected returns. MRCB, RHB, and Kanaka Gold Opportunity Funds, their expected return increased, but they had lower market risk, lower beta. So these three stocks are considered good investment tools. For ASML, it has the highest expected return, 0.0167, but its beta is just lower, even close to the 0, so it has low market risk. Probably due to a 2022 to 2022 share buybacks program and growing dividends, and it is the only manufacturer of extreme ultraviolet lithography EUV. Allocation and result of expected returns. The largest weightage for ASML, which is 0.5, but it has lower expected returns. But we need to look at its future potential, so we are very recommended to invest in this stock. The RHB and Kanaka Gold Opportunity Funds had better expected return than ASML, so we will continue to invest. The Astro is the only one that had positive expected returns. We will start to invest in Macy's, GDS, and MRCB as we reallocate their weightage into 0 due to their poor performance in the initial outlay. Since the S2 is the only one equity that had positive performance, so our total expected portfolio return is just 0.002, which is lower than the first rebalancing. Our standard deviation is slightly lower than first rebalancing. That's why our total portfolio expected returns is lower. The Sharpe ratio is less than 1, which is inadequate but still better than the first rebalancing. That is all from me. Thank you.
Hi everyone, my name is Hong Si-hao, metric number 261701. And now I'm going to present about the benchmark. And first, the benchmark we choose is CIPM and versus the actual return of this portfolio. The figures show the CIPM and actual return of 7 equity. When the actual return is higher than CIPM or the required return, that means it's a good performance, which is also undervalued. Conversely, if CIPM is higher than actual return, is overvalued and is not good. And among this equity, only Maxis has a CIPM higher than the actual return as shown in the red circle there. However, it is a negative value, so this is not a good sign. Next, we'll move to the compare the portfolio return with KLCI return. We will choose KLCI return because it's Malaysian market and most of our equity were also from Malaysia. The green line represents the portfolio return and the blue line represents the KLCI return. Our portfolio went up and down through the trading market. And the performance of the portfolio has become better than the KLCI return after the second rebalancing as shown in the black circle there. And next, for the purpose of diversifying risk, we added Kenya Growth Opportunity Fund at the first time of rebalancing on 28 October 2021. For the second rebalancing on 9 December 2021, we also decided to add an international stock, which is ASML Holding. Despite there being loose in the initial outlet and the first rebalancing, the second rebalancing can cover the previous loose and still make a profit. And after the end of the trading, the return of the portfolio has increased by 29.94% or 149,689 ringgit Malaysia from 500,000 that has the initial fund. So this is it from our group, and thank you.